One of the bigger drivers was there was a greater recognition amongst the community that really everyone, not just the venues, needed to take an active role in ensuring that the markets were safe. So this meant that the exchanges themselves, the regulators, but then also all the participants were taking much more active roles in ensuring the safety of the marketplace. My name is Tony Seo. I'm Head of Regulatory Strategy and Innovation for Nasdaq's Anti-Financial Crime Division. A big part of that is figuring out what the next big challenge or opportunity around fighting financial crime is and bringing that back into our products. Today, we'll be talking about how Nasdaq is working with our global community of regulators, exchanges, market participants to drive integrity in capital markets and beyond. So Nasdaq was the world's first electronic market, and now we're a global tech provider in the financial market space. So our vision is being the trusted fabric of the financial market system. In saying that, financial crime is probably the biggest global challenge for that system and puts a major strain on it. Financial institutions spend over $1.28 trillion a year fighting financial crime, and it's also linked to a lot of wider societal problems like terrorist financing, human trafficking, and other activities that hold back entire communities. It's the industry's toughest challenge, and we feel that it's best tackled through a combination of innovation and collaboration. So as a part of that, our anti-financial crime and reg tech teams focus on providing innovative new tools to root out these bad actors. So criminals are adopting the latest and the newest technologies themselves. To combat them, it's not just enough to keep up, but really need to kind of go beyond. The area at Nasdaq that we really focus upon are AML, fraud, and market surveillance. With market surveillance being the focus of having safe markets is really where I started. So Nasdaq Market and Trade Surveillance are a set of tools that we provide to exchanges, regulators, kind of market participants to detect kind of bad actors and bad behavior in the financial data. So it's really running kind of very advanced algorithms across large swathes of financial data. Smarts was acquired by Nasdaq in 2010. Back when Smarts started, markets were starting to go electronic, and that level of low-level kind of order book data just wasn't available back then. Smarts was really doing something very unique at the time, which was ingesting directly from the trading system very low-level financial data. It was kind of equivalent to looking at things from a quantum physics perspective as opposed to a kind of classical physics perspective. The idea of the founders in the group was that we could take that very low-level data and then we could use that to find instances of bad actors or manipulative practices. For example, things like pump and dump. A pump and dump scheme is when a manipulator would push up the price of a stock, normally by buying it heavily, but they may also at the same time talk up the stock, or they might be promoting it or releasing fake news at the same time. The goal being very much to push up the price of that stock, and generally it's a lesser known, more liquid, less traded stock. The movement in price would attract kind of new people to look at that stock, and then their hope is to kind of attract kind of liquidity, essentially eyeballs onto that kind of security. Once the price reaches the price that they're after, they would dump their shares in that stock with the hope of making a profit. So this is a kind of fairly kind of well-trodden manipulation, one we've also started seeing in kind of things like digital assets as well. So back then it was all on site. So I used to go on site. I would go to places like Thailand, Hong Kong, France, Saudi Arabia, Switzerland, and I would sit down with the investigators themselves. So these were people that had been working on that market, investigating that market for many years. I would sit with them, I would learn kind of what they were thinking, what they were doing around those marketplaces, and I was essentially kind of coding it into the data itself. So for me, it was a huge learning experience in terms of what made markets tick, but also what made market manipulators tick. The acquisition was back in 2011, and since then, we've grown hugely. However, we still have a large development team based in Sydney, Australia. The timing was quite perfect. It was a point in time where regulators were really pushing the markets to have much higher standards and take a much more technology-driven approach. We had a lot of things happening around that time. For example, The way people traded changed hugely. Electronic trading became much more pervasive. And things like HFT and algo trading were starting as well. The EU market abuse regulations were also coming to effect, which also introduced much higher standards and expectations in terms of what people needed to do. And we also saw new types of behavior such as spoofing, which was a new, much more technology-driven approach to market manipulation. At the same time, I think one of the bigger drivers was there was a greater recognition amongst the community that really everyone, not just the venues, needed to take an active role in ensuring that the markets were safe. So this meant that the exchanges themselves, the regulators, then also all the participants were taking much more active roles in ensuring the safety of the marketplace. So within financial markets, the pace of societal and technology innovation has been happening faster than ever. And what we're seeing market manipulators, bad actors, they're evolving just as fast. So the goal at Nasdaq is really to be as nimble as possible, to identify and work on these issues as soon as they appear, and really to jump on and take the opportunity of novel new technologies like artificial intelligence to combat these practices. However, the bad actors, they really take advantage of the cracks between financial institutions. So I feel if we really were to move the needle forward, we need to take a much more collaborative approach to fighting financial crime. And that is really the goal to drive the industry forward.